Hello traders, Greg here with a market update. Okay, so if you have been trading the currency markets in the US dollar in the last few months, you have basically been trading US bond yields. Now in September of last year, we saw US bond yields. We're talking US 2-year yields and 10-year yields, which is the main focus for currency markets and what they are very closely correlated with and move with. Those markets, US 2 yields and 10s, were at their lows at September of last year. So you're looking at 3.5%, 3.6%. And dollar index was also down towards, had sold off. US dollar index quite aggressively was down at 100. And the market was very bearish on the dollar index and US dollar. However, we saw a huge turnaround in bond yields. Bond yields from mid-September up until January, when Trump got started office and his inauguration, was one-way traffic. We saw an amazing rally in those bond yields, where we saw US 2 yields back up to almost 4.5%. So rallying a good 100 basis points. We also saw US 10-year yields actually go much further, and they peaked at 4.8%. So they put on 130 basis points, massive move. And that drove the US dollar a lot higher. So, we saw dollar index go, as high as 110. And so look, there was a couple of reasons for this. One of the reasons obviously is that market has been worried about US debt. US debt is at record levels. It's at $36 trillion. Previously, the US government was adding $1 trillion in debt every 2 years. Now the US government is adding $1 trillion in US debt every 90 days. So if the US government continued to spend and add debt the way it's adding debt at current rates, by the end of 2025, the US government debt would reach a record $40 trillion. A lot of the market has seen that as irresponsible and obviously not serviceable. And so obviously the bond market wants a higher premium for buying US debt. So it means a higher US bond yields, and that's something that has driven those US bond yields higher. That's what's going on in the debt market. Okay, so moving along to commodity markets. So we've seen some very some big moves in commodity markets. The biggest move we've seen in commodity markets is obviously been with respect to gold. Gold has been the best asset market this year. Gold is up 10% for the year. Gold has made new record highs at 2,950 just last week. So the only way that you could describe the gold market is bullish. So yes, since Trump has been inaugurated, the gold market has only gone one way. Look, there's a few factors in play here. If we are talking about Trump, look, Trump has brought some uncertainty to the world. Look, gold loves uncertainty. Sometimes an uncertainty in the market buys gold. Some of Trump's policies, whether or not they're serious or not, taking Greenland, taking back the Panama Canal, maybe making Canada the 51st state, these sort of taking Gaza, these sort of things, there's a new global order in town. The market on the back of that, yes, a lot of uncertainty buys gold. The tariff policy was something, a lot of uncertainty there. So the market was buying gold. So, look, that's one of the reasons. Another one of the big reasons, yes, is what was going on with global debt and US debt. We just talked about that. How that debt is just basically, ballooning now to levels that are extreme, that look like potentially unsustainable. So certainly gold has also risen on that. The other thing too is that we found end of last year that after 6 months of China being out of the market, the Bank of China started buying gold again in November. We found out that in December they actually doubled their purchases. So when the market finds out that you have big central banks, back in the market buying gold, obviously, they also, jump back on it and try to front run, and they feel much safer buying gold. So anyway, look, hope you do well in your trades, and we will catch back in with you shortly.